Next, let's go on to the invoices. And we have 3 invoices, and a Gmail about a gift certificate. So let's get started with the first invoice for June week 2. And we can see that it is a job deposit. And we did learn about job deposits in June week 1. So let's go ahead and put this in. So we're going to go to New Invoice. And this is for Warren Peace. Just going to add that name in quickly. And invoice number 1016, that is actually June 9th. And here's where we can put that job deposit that we added last week. And the amount is $200, and there's no tax on that as previously discussed. Is there any payment information on here? Yeah, paid e-transfer June 9th. So now we're going to hit save. And you can see now that the receive payment button comes up. I'm going to click that. And I'm not sure why it's not letting me click it. Is it because what's with this new layout, QuickBooks? Is that not interesting? I'm going to hit refresh and see if it fixes it. So it's been saved, so I should be able to make a payment. Oh, when it refreshed, it saved in, like it went to a new one. So this little clock lets us jump back to the most recent, invoice that we've put in because we're in the invoice screen. So let's go back to 1016. Now we can click receive payment. Can I do it when it's back to its slightly smaller size? I guess this new rendering that they have has a few bugs in it, but that is to be expected when new things come down the pipeline. So we've got new payment, and it was paid June 9th. And I generally don't use this as much as I use that reference number. Like I said, from the invoice itself, the link to the payment shows the reference number, not the payment method. So this is a way that I can see things quickly from within the invoice. So it's just a Naomi thing that I do. And I'm just going to say e-transfer right there. And we're going to deposit that right to the bank. Canada Bank checking, and that's all 200, and we'll say save and close. All right, let's see what is next. Let's open this one up. So here we have an invoice to Carol Singer, and we actually have a few things going on here. So first of all, we have the garden design and installation, and that's $1,600. But we can also see that there is a 25% discount applied to that garden design and installation price. So that's a reduction of $400. And also she is reducing the amount payable to this invoice by the job deposit that has been received on June 6th. Let's go ahead and put this one in together. So I'm just going to go save and new because it's still on War and Peace here. And let's put in Carol Singer, and that's invoice 1017. And that is June 12th. Let's put in that first line, garden design and installation, and the rate is $1,600. So we have a few options for putting in a discount. A discount is reducing the revenue. So basically, because the initial revenue was garden design and installation, I'm going to put the discount to the same product or service. Now, we could create a product or service called discount, and we can point it to a discounts category GL account if we want to track those discounts that we give separately. So that's an option, but it would still be in the revenue section of the profit and loss. But for this case study, we're not going to track that discount category separately. We're just reducing the revenue. Basically, she's getting a break. She's getting the garden design and installation at a lower price. There is a third way to apply a discount to a client invoice, and we'll talk about that in a moment. So in this case, we can go ahead and say right on this line, 25% discount applied. And, we could just do, negative 400 if that's something that we wanted to do, or we can even say, just as Sarah did here, is it's like a negative 0.25 of 1,600. So that'll get us to the same negative 400 amount. And again, that is subject to HST. It's reducing the revenue, so we're reducing the HST collected. And then, as we've already discussed, we're going to have the job deposit reduce the amount payable of the invoice. And I like to note when it was received. Usually you're not necessarily seeing it noted. So you would go to Carol Singer's history and just see when that came in so that we could say, reference it here. So received June 6th, and that is a negative 200. And again, that's out of scope because it wasn't revenue when we put it in. It's now not going to be revenue when we take it out. However you treat it going in is the way that you treat it going out. So that confirms that the invoice total is 1156, and that is what it shows here. Now, the third way to do discounts in QBO is to go to settings and turn on the discount tracking option in your QBO file. If you do that, a new little section right here, discount, will show up. And there you can say 25%. But you can see in this case, it's going to do 25% of the subtotal. It would do the 25% of the subtotal of 1,400. And that's not what we want to show. We don't want a 25% of 1,400. We want 25% of 1,600. Now you can, I think, change it to say an amount instead of a percentage. So that does work around that issue. You can see I've got that discount value of 400, but it's not really communicating very well that it's 25% of the services. So that lacks the communication on the invoice of what's going on. And also you don't have a choice about whether you want to put this towards decreasing the GL account related to services. It automatically over here on the profit and loss, you can see, just goes to discounts given. You can't really tell it, well, I want that to go to decrease my services income. So that's one of the other reasons that I don't, it's not my preferred way, but as you can see, it's doable. And then something else that bothers me just a little, and it's no big deal. This is on the GST HST report. You can see it says 7,700, which is the total right here. But if we go into that report that sort of breaks down the total of the income, you can actually, it says 8,100. And even if I were to sort by account, for example, we can see, oh, that's 6,500 for sales of product income, 16 for services, which matches right here, but it's not showing me the discounts given in this report either. So it's not wrong, but it's definitely not my preferred way of doing it. Now, if I scroll down here, we can see that it was paid by check on June 12th. So we're going to hit save, just save on its own. Watch that receive payment show up, click it, and the payment date June 12th, and it was a check. She doesn't say the number, and she doesn't say when or how it goes into the bank, so I'm just going to put this to undeposited funds for now, and we're going to go save and close. So let's take a look at what is next here. We have one more invoice this week to put in. And here we have an invoice to Crystal Ball. There was no deposit, but interestingly, she paid a portion of it with a gift card and she paid the rest of it with a check. So let's go ahead and put that in. So the customer is Crystal Ball. And the invoice number, just to confirm, yeah, is 1018. It is June 14th. That was garden design and installation for $850. And we can see 960.50. So next we're going to click save so we can put in those payments. So I'm going to go and receive payment. And first let's do the gift card. And so does she say, yeah, it was June 14th and 100 was paid with gift card. So I'm going to go ahead and say gift card here because I'm going to illustrate a point, and I'm just going to add a new payment method for illustrative purposes and just say GC for gift cards. So my payment method I chose is GC, just for illustration for now. And I actually reference number is gift card. And the deposit is going to the gift cards issued. Now, it doesn't say here how she got the gift card, and we actually don't need to know specifically how she got this gift card. What's important is that whenever a gift card is issued or sold, we're told about it as bookkeepers so we can increase the liability when the gift cards are issued and sold. And then when they're used, it's a completely different transaction of that gift card being used. So we don't need to know how she got this gift card in order to put this payment in, as long as we were told, maybe with the Shopify sales report, how many gift card sales were for the month, likely might have been included in there. So we're going to say gift cards issued, and she isn't paying the full $960. She's paying $100 of it with that gift card issued. So that we're applying $100. So I'm going to go ahead and hit save. And then I can actually click on the invoice link right here. So I might go back to the old layout to sort of show you why I made that GC reference. We'll see, but right now it is saying that balance due is $860.50, and that is how much was paid with check. So let's go ahead and receive that payment. So crystal ball, payment date June 14th, and this is with a check. And that went to, we're going to put that to undeposited funds, right, like this, $860.50. And isn't this great? You see what the original amount is, what the open balance is, and now we're applying it. So I'm going to hit save. And again, I'm going to go back to this link right here. And this is the last one we're entering for this month. Let's see, we can't see here the reference number. So that's different than the original layout. Let me just pop into that switch to old layout, so is no longer visible and the payments referenced on the new layout. So if one invoice has multiple payments, it's hard to see which payment is which. I'm going to do share feedback. All right. They do read that, by the way. They do read the feedback that is shared. So just a confirmation that that is always a good thing to share your feedback when you have any concerns or issues. So now you can see this is the old layout. This is what it looks like when I was first showing how to do the invoices in the April and the May portion of the case study. But look, if I go to two payments now, we can see that that $100 was paid by gift card and the $860 was paid by check. And in the new layout, it just said 100 and $860. It didn't tell me how. And if you remember, the payment method was GC, and it's only telling me the reference number. So that's why this whole time I've only been updating the reference number, because I've only ever found that useful to me. And I use it quite a bit in the way that I do the Naomi style of bookkeeping. Anyway, so I gave my feedback, and we'll go back to the new layout when we start doing next week's invoices. Now let's take a look at what is next in the folder. And let's open this up. So here we have an email from Sarah to the Townville Humane Society, and it's communicating something to us as the bookkeeper. It says, "Hi Ziad, thank you for your email. Yes, we would be happy to support the Townville Humane Society by donating a gift certificate to your summer fundraiser raffle. I will also donate a 25% discount coupon for the raffle. The gift certificate will be for $50 and will be good for any purchase in store or towards our garden installation services. The 25% off coupon can also be used towards a store purchase or garden installation services. I'll drop those off this afternoon at your office." What's interesting is the 25% off coupon happened to be used for landscaping services. So it actually was worth quite a bit more, right? It reduced the revenues by $400 as opposed to maybe something being purchased in the gift store for a few $100 and just 25% off of that. So that's an interesting concept from running a business perspective. But from a bookkeeping perspective, you saw illustrated how both the discount and the gift card is used on revenue. So for example, you saw that the 25% off coupon reduced the revenue when the invoice was created. And you saw that and that affected the revenues and the HST collected. And then you saw how a gift card just reduced how much was owed. And this is what makes how we treat this piece of document differently. I did write it out so I could say it succinctly. So in bookkeeping, a discount is a reduction of revenue at the time of sale, while a gift card is a liability that is applied to a receivable amount of revenue later. The key difference is the timing of the flow of money. A discount means you receive less money than the list price, while a gift card means you receive money in advance of providing a good or service. So with this documentation right here, we don't need to put anything in regarding that 25% discount coupon. When coupons are sort of handed out to people, there's nothing to do in the bookkeeping with that, other than when the discount is used, we'll reduce the revenue on the sales entry. Now, when it comes to the gift certificates though, they are a liability. And as I mentioned, we need to make sure that we increase the liability whenever gift certificates or gift cards are issued. Now, in this case, it's not being sold, right? So when it's sold in the store and we see the gift card sales in the monthly sales totals, and we can see sort of how they were paid, you can see that the gift card liability goes up, and let's say the bank goes up if that money was received. But in this case, no money is received for this gift certificate. So how are we going to put this liability into the bookkeeping? So from this document right here, we don't need to do anything for the discount coupon, but we do need to put in that gift certificate issuing. Let's go ahead and put that in together now. So I'm going to go ahead and close this invoice, and we are going to say new expense. And so we're going to say the Humane Society, we're going to pay out of the gift cards issued bank. We can do that only because the way that I've set up this bookkeeping file is that the gift cards issued is a type bank, and that's to make the payments easier on the invoices. And you can see that it's helping us now as well. So the date was June 10th, and we're just going to say fundraiser, that. And the category is going to be donations, or we could also put that towards advertising. So if you're giving out sort of gift cards as advertising or promotional reasons, you're not selling them, but you're giving them out, you could categorize that as advertising. But in this case, it's being donated to Townville Humane Society. And so for this reason, we are going to put this towards donations. And we can say $50 gift card donated to Townville or to summer fundraiser, because we say Townville right there. And that was $50, and it is not exempt. It is out of scope, though it's an expense, so it doesn't actually matter too much, but it's got nothing to do with sales, remember? And we're going to go save and close. So if your gift cards issued was not type bank, you could also do that with a journal entry. Let's show you what's going on in the background of this expense entry. As I said, we're increasing the liability, and we're increasing donations expense. And we can see that more under transaction journal. And the transaction journal shows you sort of the underlying journal entry behind the interface that you have used with the subledgers and the transaction entries in QuickBooks. And you can see here that the journal entry would be to credit gift cards issued and to debit donations. So if you weren't able to put in an expense in that same way, because you can't hit up that gift cards issued in the same way with your expense screen, you could do a journal entry just like this. So let's take a look. That is it for the invoices for June week 2. Let's check out the deposits. And here we can see we have another register recap. We had one last week. And we went over and discussed this in June week number 1. In this June week number 2, we can see that the closing balance from last week's register recap is up here in A, and that she's doing it on June 14th. She counted how much cash was in her register, and this is how much cash was in the register. And then she took the opening balance. She took that amount that the register software said was paid by cash between June 14th and June 8th. And it told her $898.51. There were no receipts paid by register cash or tips or no other cash in. And so based on the opening balance plus what the sales register software said was paid by cash for the period, we should expect to see $1,475.06. But when we counted the cash, it was actually $1,475.55. So again, we have a little bit more in there, not much, than what we are expecting. So just like last week, we're going to put this in as an over-under. If it was negative, which it will be in future periods, that would be entered in as an expense. But because it's a positive, we're going to put it in as a deposit into the register cash. And last week, I did put in the $500 cash deposit, but I happen to have a note down here that says on the June 16th, there is actually a combined deposit slip. So we'll put it in at that point in time when we get the June 16th combined deposit in June week number 3. So right now, all we need to do is put in this 49 cents over under. As I mentioned before, we cannot put any sales in from this report. It is not a sales report. It just is how much of the sales for that period was paid by cash. And we are going to put in this over under just so that when we go to reconcile the register cash GL account at the end of the month, we're going to take into consideration the over under that Sarah has noted. And just an extra note too, I do say that when you use this register recap sheet, you want to make sure you do one on the very last day of the month, every month, no matter what your normal cadence is, daily or weekly, because in this case, Sarah is giving us monthly sales reports. And so because we have a sales report that's going to go to June 30th, I'm going to want to see a register recap sheet done June 30th as well to enable us to do that reconciliation a bit more easier. Okay, excellent. Let's go ahead and put this in. So we were here just a moment ago. And we can go new, and because this is an over, we're going to make this a bank deposit, and the bank that we're depositing into is the register cash. And you could if register cash wasn't bank type for whatever reason, and you can't do a deposit in whatever program you're using, it could also be put in with a journal entry. So the date is June 14th. Now we can see that there's some checks here this time ready to be deposited somewhere. We are going to see that combined deposit in June week number 3, but it's got nothing to do with the register cash. So we're just going to ignore them. It doesn't matter that they're sitting there right now. We're not going to check them off. We're just going to put the funds in right here in this add funds section. And so this is received from the monthly store sales, and the account is over under. And the amount was 0.49. And again, that is out of scope. Save and close. So that was it for the deposits for week number 2. Now moving on to payroll.